Welcome to the Authority Hub podcast. I'm Nolan, joined as always by Claire.
And today we're featuring the expertise of Sherry Corbitt, mortgage broker in Whitby, on.
If you've sat down with your numbers, run them through a bank's qualification process, and gotten a flat no, what if that no wasn't actually the end of the road?
That's the question a lot of people in Whitby and across Durham region are sitting with right now, and it's exactly where Sherry Corbitt's work lives.
So let's set the scene, because this isn't abstract, this is a real situation that plays out constantly.
A self-employed contractor in Whitby, 4 years into a legitimate, profitable business, walks into a bank to apply for a mortgage.
The gross revenue is strong, the business is real, the person is financially responsible. But the bank looks at the notice of assessment and sees a net income figure that's been reduced by years of legitimate business deductions.
Vehicle costs, equipment, home office, subcontractors, all of it written off correctly, which is exactly what an accountant would advise.
And the bank runs that net income number through the stress test. The total debt service ratio comes out too high, and the answer is no.
Not because the borrower is a bad risk. Because the bank's underwriting model isn't built to evaluate that kind of file.
And that distinction matters enormously, which is exactly what Sherry Corbitt helps people understand.
The standard bank system is built around a very specific borrower profile, stable employment, a T4, clean credit, and a debt-to-income ratio that fits within the federally mandated stress test.
When one of those boxes doesn't get checked, the application stalls. Not because the borrower is in trouble, but because the system doesn't have a way to read the file.
And this is where the framing that Sherry Corbitt uses is so important. Alternative does not mean last resort, and it definitely doesn't mean predatory.
Right, it's a category that includes self-employed professionals, investors, newcomers to Canada, anyone whose income doesn't arrive in a neat T4 at the end of the year.
The lenders in this space, B lenders, private lenders, credit unions, monoline lenders, each have their own underwriting criteria, and some specialize in exactly the situations that banks can't evaluate.
So back to that contractor in Whitby. What does the path forward actually look like when Sherry Corbitt gets involved?
An alternative lender who specializes in self-employed borrowers looks at the same file completely differently. They might use a 2-year average of gross revenue, or they'll look at 12 months of business bank statement deposits to establish an income figure.
Some lenders use what's called a stated income program. The income is declared and supported by business documentation rather than tax returns alone.
And when you use that figure instead of the net income from the notice of assessment, the qualifying income goes up, the TDS ratio comes down, and the application moves forward.
The rate will be higher than what a major bank would offer. Sherry Corbitt is very direct about that. But the comparison isn't between a great rate and a higher rate.
It's between moving forward and standing still. That's the honest framing.
And the structure is usually a shorter term, 1 or 2 years, during which the borrower is building their income history and credit profile so that at renewal, they can qualify with an A- lender.
That exit strategy piece is something Sherry Corbitt builds into the plan from the beginning, which is a really important distinction.
Let's talk about the credit side of this, because income isn't the only reason banks say no.
Credit profile is the second major reason for a decline. A score below a standard threshold closes the door at most major banks, but alternative lenders often work with borrowers in that range.
And some private lenders focus almost entirely on the equity position in the property rather than the credit score at all.
Private lenders are typically individual investors or mortgage investment corporations, MICs, lending their own capital. Because they're not subject to the same regulatory guidelines as banks, they can set their own criteria.
That flexibility is the point. A private lender can approve a mortgage quickly, which matters enormously in a competitive purchase situation or when someone is facing a power of sale.
The cost is higher. Private rates in Ontario sit meaningfully above B lender rates, and there are lender fees involved. Sherry Corbitt is clear-eyed about that.
But for a borrower facing a renewal on a property where they've built significant equity, or who needs to consolidate high-interest debt quickly, the math can still work in their favor.
And that debt consolidation piece is one of the most practical applications of alternative mortgage solutions that comes up in Whitby and Durham region.
Walk us through how that actually works, because I think people underestimate how accessible this option is if you've built equity.
If a homeowner has built equity in their property, they can refinance to access that equity and use the proceeds to pay off credit cards, car loans, or lines of credit. The mortgage balance goes up, but the monthly obligations that were eating into cash flow go away.
And the net effect on monthly expenses is often positive. You've traded high-interest consumer debt for a mortgage payment, which is almost always a lower rate.
There's actually a scenario in Sherry Corbitt's work that illustrates this really well. A first-time buyer used a cashback mortgage to pay out a car loan at the time of purchase.
With that monthly car payment gone, the total debt service ratio improved enough to qualify for the purchase. And they layered in a purchase plus improvement program on top of that to fund renovations.
So they walked away from closing with a home, cleared consumer debt, and money to make the property work for them. That's not luck, that's planning.
And that's exactly the kind of whole picture thinking that Sherry Corbitt brings to files that look impossible on first glance.
Let's talk about renewal, because this is where Sherry Corbitt's advice is particularly urgent. Timing matters more than almost anything else in this space.
When a mortgage comes up for renewal, the lender is not obligated to renew it. For borrowers in B lender or private mortgage situations, that's a real and serious consideration.
If the property value has dropped, if the borrower's credit hasn't improved, or if the lender's portfolio criteria have shifted, a renewal can be declined. And if that happens under time pressure, the options narrow fast.
The recommendation from Sherry Corbitt is to start reviewing renewal options several months before the maturity date. At that point, there's time to run scenarios, pull documents, address credit issues, and approach lenders without urgency compressing your position.
And for borrowers who entered a private or B lender mortgage as a bridge strategy, the renewal conversation should actually start at the time the original mortgage is signed.
The question to answer at the outset is, what does this file need to look like at the next renewal to qualify with an A- lender? That might mean paying down a specific debt, filing taxes in a way that shows more income, or accumulating more employment history.
Knowing the target makes it much easier to hit it. That's a line that really stuck with me from Sherry Corbitt's approach to this.
Let's talk about documentation for a second, because one of the things that slows people down is not knowing what they need to have ready.
For a B lender application, the core package is 2 years of T1 generals and notices of assessment for self-employed borrowers, 6 to 12 months of bank statements, a current mortgage statement, a property tax bill, and a void check.
If rental income is involved, the lender will want lease agreements and often 12 months of rental deposit history. Most B lender approvals, once the file is complete, move through underwriting within a few business days.
For a private lender, the file is leaner. An appraisal is almost always required, but beyond that, identification, a mortgage statement, and a brief explanation of the situation are often sufficient.
And for bank statement programs specifically, lenders typically want a full year of business bank statements showing consistent deposits. They average the deposits, apply a reasonableness factor, and use that as the qualifying income.
It's a different way of documenting income that reflects how some businesses actually operate, and it's one of the most common questions Sherry Corbitt fields right now.
The most important thing, and Sherry Corbitt is very direct about this, is not to wait until you're under pressure to pull this documentation together.
A second opinion at the planning stage costs nothing and can completely change what options are available to you. That's not a sales line, it's genuinely how the math works out.
And it matters who you're having that conversation with. Not every mortgage broker works regularly in the alternative lending space, and the difference in outcome for a complex file can be significant.
Sherry Corbitt, as a mortgage broker in Whitby, works in this space regularly. That means knowing which lenders are active, what their current appetites are, and how to structure a file so it presents well.
Brokers who work in this space have relationships with B lenders, MICs, and private lenders that aren't accessible through a bank branch. That access matters.
And there's an honesty piece here too. If an application isn't ready for an A- lender yet, saying so clearly, and explaining exactly what needs to change and over what timeline, is more useful than submitting to 5 lenders and collecting 5 declines.
Multiple hard credit inquiries in a short period can lower a credit score, which is the opposite of what a borrower in this situation needs. That's the kind of thing Sherry Corbitt flags before it becomes a problem.
So let's bring it back to that contractor in Whitby. They came in with a file that looked like a dead end. They left with a mortgage, a plan for renewal, and a clear picture of what their file needs to look like in 2 years.
The numbers stopped being a barrier. The family moved forward, and the path that made that possible wasn't complicated. It was just a different lender, structured correctly, with an exit strategy built in from day one.
That's what alternative mortgage solutions actually means in practice. It's not a workaround. It's a legitimate path that exists because income is more complicated than AT4, and the mortgage market has evolved to reflect that.
The lesson here is simple. A bank's no is not the final word on what's possible. It's just the beginning of a different conversation.
And if you're in Whitby or anywhere in Durham region and that conversation is one you need to have, Sherry Corbitt is the right person to have it with.
Sherry Corbitt is a mortgage broker in Whitby, specializing in alternative mortgage solutions.